I'm going to go over this chart right here and why this chart is very important to the housing market in 2026. This chart right here represents those who own a home and have a mortgage on that property. 20% of those who own a home right now with a mortgage have an interest rate of 6% or higher. 20% have 3% or lower. 60%, that huge chunk right there, are those who have a rate between 3% and 6%. Now, why is this important? If we see rates getting down to 5.75, 5.5, that's going to get this 60% moving very quickly. You see, the average time someone lives in a home is 7 to 10 years. If you bought a house in 2020, we're in the 6th year. It means we're getting really close to that average of when people move. Now, if you bought a home in 2018 and you refied in 21 and you got that 3% rate, you're definitely thinking about moving. You're going into 8-9 years. You're ready to start looking for a new home. So once these guys start moving, once that 60% starts moving, more homes will be coming on the market. More attractive homes might be coming on the market, leaving these 3% to think to themselves, you know what? All right, we're close enough. Let's go ahead and make that move. Once these guys start moving, it's going to trigger them, and it won't be long before we don't see hardly any 3% or less mortgages, because they're going to start to fade. We're going to go 20% down to 15%, down to 10%, and then we'll probably hold pretty strong between 5 and 10%. But I am looking to see more people jumping into the market because we've been in a slow market for 3 years. That is well beyond the normal slow market, which means people are antsy to get out. Rates are very, very close to going below 6% consistently. We see that happen. We do have a new Fed chair coming in. We'll see if that makes a difference with those mortgage rates. But I am thinking that 2026 is going to be a year we see a lot of movement in real estate. And I'll tell you what, I'm ready for it. Are you?